Welcome to the stock market. Whether you're interested in building wealth, saving for retirement, or just curious about how stocks work, knowing the basics is key. Let's break down the essentials to get you started on your investment journey. What is the stock market? The stock market is a place where investors buy and sell shares of companies. Think of each share as a small piece of ownership in that company. When you buy a stock, you're investing in the company's future, hoping its value will grow over time. Stock prices fluctuate based on supply, demand, and various economic factors, giving investors opportunities to profit if the stock value increases. Why invest in stocks? Stocks have historically provided higher returns than savings accounts, bonds, or other investment types over the long term. By investing in stocks, you can grow your money through dividends, when a company pays part of its earnings to shareholders, and capital gains, when you sell a stock for more than you paid. Investing in stocks is about long-term growth, wealth building over years, not days. Types of stocks. There are two main types: common stocks and preferred stocks. Common stocks give you voting rights and a claim on the company's profits. Preferred stocks usually don't come with voting rights, but they offer more consistent dividends. Both types can offer value, but most beginners start with common stocks due to their growth potential. Understanding risk and reward. Investing always involves risk, especially in the stock market. The value of stocks can rise and fall daily, and factors like economic conditions, company performance, and market trends all affect stock prices. To manage this risk, diversify your portfolio. Spread your investments across various stocks, industries, or even asset classes. This way, if one stock doesn't perform well, others may help balance it out. Getting started. Stock exchanges and brokers. Stocks are bought and sold on stock exchanges, like the New York Stock Exchange, NYSE, and NASDAQ. But as a beginner, you don't need to be on Wall Street. Online brokers, like Robinhood, TD Ameritrade, and E-Trade, make it easy to trade from your phone or computer. Choose a brokerage with low fees, user-friendly platforms, and educational resources for new investors. Researching stocks. Before buying, research the companies you're interested in. Look at their earnings reports, recent news, industry trends, and financial health indicators. This will give you a better sense of a stock's potential. Key metrics to watch include P/E ratio, price to earnings ratio, EPS, earnings per share, and the company's growth over time. The more you know, the better you can evaluate the stock's potential. Long-term mindset. Finally, remember that investing in stocks is a long-term commitment. Markets go up and down, and there will be good days and bad days. Successful investors are patient. By investing consistently over time, reinvesting dividends, and keeping a long-term view, you're more likely to see steady growth. Closing thoughts. The stock market may seem complex, but these basics are all you need to start. Learn gradually, make informed decisions, and avoid emotional reactions to market swings. With patience and knowledge, you can build a solid foundation and begin your journey toward financial growth and independence. Happy investing!